In the previous video, we discussed about taxation. Now this is video number 26 and we'll discuss about public debt, internal versus external debt. After this, we are going to have one more topic and then our first module, which is about basics of economics, is going to get completed, right? So we have covered a lot many topics. We started off from GDP, GNP, NNP, then we moved on to various other topics like budgeting, repo rate, reverse repo rate. We've done a lot many topics and we are going as per the syllabus. In the next video, I'll show you the first module which we have completed and the second module which we are going to start after the next video. So let's understand what is public debt. डेट का मतलब एक तरह का उधार, पब्लिक से लिया गया उधार. Refers to the total amount of money that a country's government owes to creditors. Here, पब्लिक से लिया गया नहीं, पब्लिक द्वारा लिया गया उधार. पब्लिक डेट इज पब्लिक द्वारा लिया गया उधार. हमने गवर्नमेंट को चुना और गवर्नमेंट किन किन से उधार लेके बैठी है उसका खामियाजा भी हमारे ऊपर आएगा. देश के अंदर भी और देश के बाहर भी. Governments borrow money to finance budget deficits, fund infrastructure projects, and meet various financial obligations. Public debt can be classified into two main categories: internal debt and external debt. Now, the portion of a country's total public debt that is owed to its own citizens, businesses, and institutions. मतलब कि इंटरनल डेट वो डेट है कंट्री के टोटल पब्लिक डेट का जितना उधार ले रखा है गवर्नमेंट ने, वो वाला पोर्शन that is owed to its own citizens, businesses and institutions. गवर्नमेंट ने ये सारा इंटरनल डेट अपने लोगों से लिया हुआ है. देखो, डेट में उन्होंने हमें दो चीजें बताई. गवर्नमेंट बोरो करती है पैसा to finance budget deficits, to finance fund infrastructure projects and meet various financial obligations. इतने सारे काम करती है गवर्नमेंट जो कि आजकल हम देख रहे हैं. गगनयान मिशन हो रहा है, इतने सारे रोड्स, इतना सॉलिड इंफ्रास्ट्रक्चर बन रहा है, जो आगे एयरपोर्ट बन रहा है नोएडा साइड दिल्ली में. There's so much happening which is done by the government. अब ये गवर्नमेंट पैसा कहाँ से लाएगी भाई, राइट? विद इन द कंट्री से लेगी, अपने ही सिटीजन से लेगी, बिजनेसेस से लेगी, इंस्टीट्यूशन से लेगी. ठीक है, तो ये हो गया इंटरनल डेट. बाहर से लेगी, वो हो गया एक्सटर्नल डेट. नाउ लिटिल बिट about the current affairs. जो कंट्री डिपेंडेंट होती है फाइनेंशियल ऑब्लिगेशंस के लिए ऑन एक्सटर्नल डेट, वो कंट्रीज कोलैप्स कर जाती है। जो कंट्रीज इंटरनल डेट पे ज़्यादा फोकस करती है, मेक इन इंडिया, विल डू इट आवरसेल्व्स। यूएस हमें रेट टैक्सेस में फंसने की कोशिश कर रहा है, हम नहीं फंस रहे। हमने और समझौते कर लिए। वी आर शेकिंग हैंड्स विद अदर, वी ऑल नो चाइना ऑलरेडी। यूएस का एडवर्सरी है, बट हमारे लिए इस टाइम पे इम्पोर्टेंट है। रशिया हमारे लिए इम्पोर्टेंट है, चाइना हमारे लिए इम्पोर्टेंट है, क्योंकि कहीं ना कहीं एक्सटर्नल डेट चाहिए, बट रिलेशन, ट्रेड रिलेशन हैज टू बी इन इक्वल टर्म्स। हमें कोई टर्म्स डिक्टेट ना कर पाए, इसलिए हमें इंटरनली बहुत स्ट्रांग होना पड़ता है इन सब इंटरनेशनल अफेयर्स पर। ओके, अब इंटरनल डेट को फिर से समझते हैं। इंटरनल डेट is the portion of a country's total public debt that is owed to its own citizens, businesses, and institutions. The government raises this debt by borrowing from domestic sources. अब ये डोमेस्टिक सोर्सेस कहाँ है, कहाँ कहाँ से हम पैसा लेते हैं? गवर्नमेंट पैसा लेती है। गवर्नमेंट issues securities like treasury bills, T-bills, and government securities (G6) to commercial banks, financial institutions, insurance companies, and the general public. Small savings schemes like PPF, deposits in public provident funds, post office savings, national savings, NSC certificates are significant sources of internal debt. This is an internal debt. It's a public debt. So PPF, that is why PF and PPF, all those who have been born in 40s and 50s, that generation, our father's generations, or so for some of you who are aspiring right now, आपके ग्रैंडफादर की जनरेशन में भी आप देखेंगे कि वो हमेशा अपना बहुत बड़ा अमाउंट पीएफ प्रोविडेंट फंड या पीपीएफ पब्लिक प्रोविडेंट फंड या फिर पोस्ट ऑफिस सेविंग्स या एनएससी सर्टिफिकेट्स, अगर आपको नहीं पता आज जरूर पूछना उनसे कि आपने अपने इन्वेस्टमेंट्स कहाँ कहाँ कर रखे। आपको समझ में आ जाएगा कि वो पोस्ट ऑफिस सेविंग्स करके बैठे हुए हैं, नेशनल सेविंग्स सर्टिफिकेट्स लेके रखे हैं उन्होंने, और पीपीएफ लेके रखा है, जो कि बहुत अच्छी इन्वेस्टमेंट्स है, सॉलिड, वेरी 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 सॉलिड इन्वेस्टमेंट्स, वेरी सॉलिड। ओके, दीज आर कंसिडर्ड टू बी द वेरी वेरी सॉलिड इन्वेस्टमेंट्स। कहीं नहीं जाती है, आपका पैसा धीरे 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 मल्टीप्लाई होता चला जाएगा, and that makes a person very strong financially. But yes, it is a slow process in comparison to share markets and all. It's less risky. Okay. Special securities पे आते हैं. The government also issues special securities to specific institutions like the RBI and public sector banks. RBI, we have done a complete chapter on RBI. We've devoted 2 videos on RBI. Then comes significance. Now, internal debt is generally considered less risky, we discussed just now, than external debt because the debt is denominated in the domestic currency, right? ये भारत देश की करेंसी पे काम करता हुआ, ठीक है, वो बड़ा इम्पोर्टेंट है. The government can manage this debt more easily through its monetary and fiscal policies. Let's understand next external debt. External debt is the portion of a country's public debt that is owed to foreign creditors, including foreign governments, international financial institutions, and foreign private investments. External debt to foreign creditors, foreign governments, international financial institutions, and foreign private investors. The way US has done to many countries, they give debt, they become a very big source for the external debt, and they make the countries dependent on them. Exactly what they've done with Pakistan. Let's move further. Sources of borrowing: bilateral debt, multilateral debt, external commercial borrowings, non-resident Indian deposits. Let's understand. Bilateral debt: loans from one foreign government to another. Multilateral debt: loans from international organizations like the World Bank and the International Monetary Fund. That's quite simple. IMF and World Bank. External commercial borrowings: loans raised by domestic entities from foreign sources. Then comes non-resident Indian deposits, deposits by NRIs and domestic banks. Now, significance is this is more risky because it's typically denominated in a foreign currency, US dollars, euros. We'll be discussing about this topic, foreign currency, US dollars, euros, and what India did, how India played a very important card, and how things have changed now. Otherwise, we don't have time. See, uh, there is a time limit. I cannot move beyond 30 minutes. That's maximum time I can give to a particular video. Otherwise, as per the human psychology, our attention goes down after that time. So that's why I'm keeping the videos only to the topic, and I'm not trying to deviate from the topic, but there's a lot to be discussed over here. Okay, so fine. I hope you all are that are all are regularly going through current affairs. If not, give me in the comment section that if you want videos on current affairs on daily basis, I can do that very easily. Okay, so just let me know that, and you will find that lots of things will be, lots of your issues related to economics and current affairs will be sorted once you come to this particular videos of mine to this particular page. Please subscribe it very soon. It's a continuous process, and I'm devoted to it for lifetime. It is not a 1 day, 1 month, or 1 year thing. It's for me right now, it's a lifelong process. I'll keep doing, I'll keep working throughout my life for this, and I mean it. Okay, so significance: external debt is considered more risky because it is typically denominated in a foreign currency, example US dollars, euros. Fluctuations in exchange rates can significantly increase the cost of repaying this debt. Fluctuations in exchange rates can significantly increase the cost of repaying this debt. A high external debt can also make a country vulnerable to external shocks and currency crises. That's what we have seen in neighboring countries. Recently, a lot of bad is taking place in Nepal. But I've told you earlier as well, I'll not discuss anything with current affairs at the moment. So, it's just that I hope everything you are keeping it up. It's important for you, especially who is an aspirant who wants to become an IAS officer. So, feature of external debt and internal debt. What are the features and what are the uh, risk, currency, impact on economy? So, these are the basis on which we're. So, features are basis on which we are doing the distinct differences. So, first is internal debt is lower risk, external debt is high risk. Internal debt deals in domestic currency, external debt deals in foreign currency. Impact on economy for internal debt is less severe. Funds are recycled within the domestic economy. External debt can be more severe. Repayment requires foreign exchange, impacting a country's balance of payments. Monetary control. Government has greater control over interest rates and money supply in internal debt. Limited control. External debt depend on global interest rates and exchange rates. Prepayment can be financed through domestic taxes or by creating new money. In the case of external debt, repayment is a drain on a country's foreign exchange reserves. Now, 7 previous year questions with answers and explanations. So, we follow this pattern of our videos on daily basis. Uh, Sometimes, yes, I'm not able to make videos on daily basis, but mostly you'll find that 2 to 3 videos will at least come in a week. That much I can promise. But trust me, when the video is not made even on those days, every day I'm working on these because they are very important topics, and I have to first be sure about the notes, and then only we get to make the video. Okay, so let's move to the next one. With reference to the Indian economy, what are the advantages of inflation indexed bonds? Inflation indexed bonds. Now let's understand first. Deals with a specific type of government borrowing instrument. Inflation indexed bonds are a type of government security whose interest and/or principal payments are linked to the inflation rate. This question deals with specific type of government borrowing instrument. Indexed bonds. Okay. Inflation indexed bonds are a type of government security whose interest and/or principal payment or interest, principal amount is that amount on which we pay interest. मैंने अगर 1000 रुपए का लोन लिया किसी तो प्रिंसिपल अमाउंट 1000 रुपए हो गया उसके ऊपर मैं इंटरेस्ट पे करता हूँ are linked to the inflation rate. Statement 1. So inflation indexed bonds are a type of government security. Now what is the question? With reference to Indian economy, what are the advantages? The government can reduce the coupons rates on its borrowings by way of IIBs. IIBs provide protection to investors from uncertainty regarding inflation. Let's have a look. By offering protection against inflation, IIBs become more attractive to investors, allowing the government to offer a low real interest rate, coupon rate on its borrowings. This reduces the government's borrowing cost. Perfect, very good. Says the primary purpose of IIBs is to shield investors from the erosion of their returns due to inflation. This makes them a safe investment for those concerned about rising prices. Therefore, both statements are correct. Second one, Next one is, in the context of Indian economy, open market operations refers to this. We have done several times, and again we have this question because it's really very important. Open market operations, borrowing by scheduled banks from the RBI, lending by commercial banks to industry and trade. If it's open market operations, purchase and sale of government securities by the RBI, auction of government securities by the Government of India. It's always purchase and sale of government securities by the RBI. Root cause, we understand this one very well. We've done it several times. And we remember the rule. I've always told you. And the rule is IB, because it's the same module. So some questions will get repeated every single time. Okay, that is why topic by topic we are doing the questions. So some questions will get repeated all the time. Don't worry about this. Okay, that ways we are getting absolutely strong on daily basis. Which of the following is the most accurate statement about the fiscal deficit? I was telling you about the rule which we learned. IBDS. IB stands for increase in money supply happens with buying of government securities. DS, you must have written it down. Decrease in money supply is through selling of government securities. So any question on open market operations, we have to remember this rule. Which of the following is the most accurate statement about the fiscal deficit? Now, fiscal deficit we have already done. So we have to, let's understand. Now, there are so many statements given. Definition of fiscal deficit is the core concept here. Fiscal deficit represents the total borrowing requirement of the government. It is like government's piggy bank. It has total borrowing requirement of the government. Therefore, it is calculated as the gap between the government's total expenditure and its non-debt receipts. By definition, borrowings are the means to finance the deficit and appears excluded from the calculation of receipts. The difference between total expenditure and total receipts, excluding borrowings, and this we have definition done at least 2 times, I believe. We have seen this question also. We have done this definition of about fiscal deficit as well. Next is, which one of the following is likely to be the most inflationary in subject? You might have to watch the videos again and again. So in a loop, you can watch the videos and you will be becoming very, very strong with economics. You will have no problems with economics. Okay? You will start to love this subject, and once I'm done with this series of videos on the preliminary, I'll be making videos for the mains. So we'll be going in depth. Right now, we're just touching the topic just to understand. So some people say that it's better that start from the mains and you'll be able to do this. But I believe that sometimes that will not get you in the, you'll not be hooked to a topic, economics. You will find it very boring otherwise. But if you have a base, now base is through prelims preparation. So once you have a base, some sort of base is ready, then it is much easier. We will go deep into the topics and it will be very, very interesting. It is the most interesting thing, and we will cover 11th class book, we will cover 12th class book, and then we will cover those topics in detail on regular basis. So 11th economics, 12th economics, Then going deep down into main topics, and that makes our life much sorted for our exams. And I'm sure many of you are doing jobs. We have limited time. We all understand that. I'm also doing my daily job, and I'm teaching you all for economics. Okay. Now, which of the following is likely to be the most inflationary in effect? Repayment of public debt, borrowing from the public to finance a budget deficit, borrowing from banks to finance a budget deficit, creating new money to finance a budget deficit, creating new money to finance a budget deficit. This we have. So whenever we have, okay, so most inflationary is creating new money. Whenever we have inflation problem, we are not supposed to do this one thing, creating new money to finance a budget deficit. That's a wrongdoing actually. This question tests understanding of how different methods, we have seen this question earlier as well. Financing a deficit to impact the money supply. Creating new money, also known as monetization of the deficit, involves the government borrowing directly from the RBI by issuing new currency. This increases the money supply without a corresponding increase in goods and services, directly leading to inflation. The other options involve transferring existing funds, not creating new ones. Borrowing from the public and bank simply moves money from the private sector to the government, while repaying debt reduces the money supply. So they're not inflationary, but what is most inflationary? Creating new money. Next one. Which one of the following is or are the components of the revenue expenditure of the Government of India? Revenue expenditure. Which of the following is or are the components of revenue expenditure of the Government of India? Interest payments on loans, expenditures on subsidies, grants given to foreign governments. All three of them. The question is the understanding of revenue expenditure, which is expenditure that does not create an asset or reduce a liability for the government. We just need to look at, for revenue expenditure, we just need to look at it does not create an asset or reduce a liability. Asset we know, anything of value. Liability we know, what we are liable to pay. Interest payments on loans are a recurring liability. मतलब कि ऐसी लाइबिलिटी जो कि बार बार ही अगर होती है भाई, इंटरेस्ट पेमेंट तो करना ही पड़ेगा. आपने उधार ले रखा उस पर इंटरेस्ट नहीं पे करोगे. Subsidies are transfer payments to aid specific groups. Grants to foreign governments are also transfer payments. All three are non-asset creating and non-liability reducing, making them compensable. Next one. Deficit financing is used for raising resources for economic development. Redemption, we have seen this earlier as well. It is always economic development. Deficit financing is used for raising resources for economic development. Root cause. This question addresses the fundamental purpose of deficit financing in a developing economy like India. The government uses deficit financing, borrowing to fund large-scale investments in infrastructure. Deficit financing is done for the economic development. This spending is intended to stimulate demand, create employment, and propel economic development. The other options are not the primary goal of this practice. With reference to the Indian economy, answer the following. Bank rate, open market operations. Which of the following components of the fiscal policy are the components of the fiscal policy? Bank rate, open market operations, public debt, public revenue. See, fiscal policy is open market operations is not part of fiscal policy. It is the bank rate and fiscal open market operations are RBI's playground. Okay, but public debt and public revenue, ये तो हमने आज पढ़ा है. That is definitely a fiscal policy. So public debt, public revenue, fiscal policy. बैंक rate, open market operations तो RBI का है playground पूरा का पूरा. उन पे छोड़ रखा है, कोई दिक्कत नहीं है. So पढ़ लो आप, आंसर पढ़ लो. We are running out of time. The question requires a clear distinction between fiscal policy and monetary policy. Fiscal policy involves government's decisions on taxation, public revenue, spending, public debt. Its goal is to influence the economy through government finance. Therefore, public debt and public revenue are components of fiscal policy. Monetary policy is controlled by the central bank, RBI in India. We discussed, okay? Deals with the management of money, supply interest rates. I told you just now. Market open market operation, the key tools of monetary policy. You've studied this. See, slowly, gradually, we become strong, and strong. That's what we are supposed to do. Thank you so much. Thank you for your time. Have a good day.